Good morning, everybody. Wednesday, April 5. I have to keep this a little short. 3 doors, 4 doors down from me. The house is engulfed in flames. Something about the LPG exploded, but yeah, there's a big fire, couple houses down. Throw the video together for you real quick. Yesterday, going in, 1, 2, 3, 4, 4 green days in a row as far as closing above the previous close. Did the research, did the data, threw it all out. Obviously, we're looking short term because we are in this very tight zone as we go into the full moon. Got our red day yesterday. Red day close. We took out the previous day's lows, but we did not take out that 4056. 4056 on the SPX, definitely the next one that needs to be taken out for any kind of control to the downside. And your major pivot is that 4065, which I'll show you in a few minutes. But we did get the red day. And on that red day, getting that red day, the look for the move to the downside where we were looking at where the lows were, where this was, very cheap VIX. Just prior to the open, I threw it out there. Your Tuesday SPX Lottos, 48.85 puts. When we did get that 57 cent was the initial trade. It did drop down lower as we posted the highs, which I'll show you in a minute, where SPX rejected that 41.36. So that's pretty key right there. But I highlighted here how we tied the longest streak of the year, 7 sessions since visiting minus 1%. So that is where I want to focus on the significance here, where the last time that we visited minus 1% was when we had that 39.09, which was kind of the initial stages of this move where the SPX is now 5.13. I think it's 5.13, not 5.73. But whatever. Right up there to that 41.36, rejected it. 40.65 is primary. Any kind of a break below 40.65, and you are once again coming into where the bulls have lost control. This goes back to February. It's the major pivot as well. Bulls are beginning to lose control. Bears are starting to gain a little bit of confidence. You've got a gap, you've got another gap, you've got another gap, and we can start to begin to look to see whether or not there is some effort that can be pushed down to that 40.25 area, possibly more likely the 40.20 on a break below 40.65. However, just now looking at where we're at, and we have had this very contracted intraday range where we're still not trading over 50, with 50 points on March 31. So we're talking 7 days now where we're really not breaking above 40 points on the intraday range. So that's going to be key. That's going to be primary to see something like that. And like we were mentioning yesterday that I didn't pull up, I'll throw it on here real quick. I don't like typing in and pulling things up. The KRE, this is the spider ETF for the regional banks. And yesterday, that drop that was taking place, yes, there's a lot of volatility happening over on the bond market. Something was starting to brew over here where you take out that 41.17 and show you on a wider view, daily, 2 days, 2 years. You're already on 2-year lows. Okay, we'll go 3 years, and you're really starting to push over here, back in September and June of 2020. This is prior to Joe Biden winning the election and whatnot. So there's a lot of pressure happening over here. And what you're seeing this morning over on your own, here's your NVIDIA wide view, this looking at the big four, but come over here onto a week-to-date 5-minute, and we are getting a pretty significant breakdown over here on NVIDIA, gapping down 4 points. And this can also be a major catalyst for a lot of those weighted stocks, considering the way that they've been up all year. Again, come over here onto your crude, highlighted on crude. This 83 is a major break. If we can see crude break up above 83 and close above 83, the 200-day moving average being above that, we can start to begin to believe that there is some significance with this crude cut. And as you can see here on the 90-day chart, That 83, a break above that 83, and there could be a short squeeze pushing this back up into the 90 range. So crude is definitely going to be one to watch. VIX still lethargic, still hanging here under 20, still not getting any kind of fear. Like I was sharing yesterday, if you go out and you look at where your volume is, doesn't matter what you do, but we'll look here at SPY, for example. SPY for today, April 5, you do have some open interest. All right. You've got a couple of 30,000s. You got one 30,000 over here on the put side. All right. This is going to end the day with 250,000 trading at 2 or 3 different strikes. Come over here onto Thursday. And yes, because it's the end of the week, there is a little bit of open interest. We'll look out at next week, April 14th. And again, there is no open interest at all a week out, nothing. So this is having the major effect on the VIX because there isn't anybody out there who's actually pursuing going out and buying 1 week, 2 weeks, 3 weeks out. And that's why you're seeing a very deflated VIX and why we're looking at other items. QQQ came up into that August gap, 322. This 316 is very significant. So if we see the 316, we should see the 315. Sorry, 317. From the 317 to the 315. The 315 opens up that 9-month, 8-month, 6-month resistance area at 313. And you've obviously got your Toyota Corolla down here at 308. So, yeah, with what's happening over here on NVIDIA having a pretty decent move at the moment to the downside, not making any kind of an impact over here as to dropping down to 266, but it is having a little bit of a crater effect, having run off that 233 and even further, looking at a 30-day. I mean, here we are, 204 running up to 281 on absolutely nothing except expectations of AI. And I'm not going to waste your time. Yeah, again, good days. What we're looking at here, minus 1% days. We haven't had a minus 1% day now in 7 sessions. Longest streak since the October lows. Prior to the October lows, I haven't wasted my time to go back there and count it because the October lows kind of started a different kind of algorithm with where we're at. But where we're at is right here, right around October 21, where we had 1, 2, 3, 4, 5, 6, almost a visit on October 31. And then we had a 7th one on November 1. And then we had those big moves to the downside from 39.11 down to 36.98 in the course of 3 trading sessions. So be very, very careful. Be very, very cautious. That 150% trade over there on the SPX yesterday on the spreads, 41.30, 41.25 calls, using that data of having those green consecutive closes and the rarity of a fifth. Again, going through all the data that you've got there, boom, elongate, filled at 3, and he took 300 contracts. The dude made 90 grand.
I like the way you do business.
What are you going to do? Have a good one.